Good evening, everybody, and welcome to the 100X live channel and a special session today on 100X second edition of the India Sentiment Outlook Survey. I sincerely hope all the viewers are doing fine during this current situation across India, and we are hoping your loved ones are doing well, and we sincerely hope you take care of yourselves. And during this time, the entire 100X team felt that we had to get the whole of the pulse of the market, the ecosystem, and hence we came out with our second edition of the 100X India Sentiment Outlook Survey. And today in discussion, on the survey, we have Ninad Karpe, who's the partner at 100X.VC, and I'd like to kind of invite him in. Welcome, Ninad. Good evening.
Good evening. Good to see you, Shashank, online, of course. And viewers, hope all of you are safe and well. All of your near and dear ones also safe and well.
Thanks, Ninad, for coming over. And it's been a tremendous week across the country, but also a tremendous week across the startup ecosystem, and in fact, last couple of weeks. And during this time, we've launched the 100X India Sentiment Outlook Survey. And it's interesting to see the kind of responses we've gotten for this particular report. And I'd like to kind of bring the report up for everybody's view and obviously get your initial thoughts in terms of what were the key observations to begin with. When the report eventually came out with the responses, we saw
Sure.
Roughly 277 founders and 77 investors participate in the survey. So your thoughts around the broader sentiment of the whole ecosystem?
So, Shashank, this is the second annual survey. We did one last year. It is a sentiment outlook survey. And the reason is simple. If you don't have an organized manner in which you can get a survey done, everything is anecdotal. Your sentiment is driven by the people surrounding you in your periphery who are talking to you all the time. But that's not the true sentiment. We felt the industry requires an outlook survey, sentiment outlook survey, in an organized manner. We did it last year. We got great reviews. We have now done it again. We learned from last year whatever improvements we could do. We did it again. And we are hoping this is also well received. We have put a lot of effort in it. The idea is, in an organized manner, understand what investors and founders are thinking. This is across industries in terms of founders and across a wide segment of investors. It is not just narrowed to any particular city, vertical, or any particular way in which we have categorized. It's across. It's broad-based, and obviously, being broad-based, the results also will show. So broadly, as usual, last year also we were surprised, but this year also we were quite surprised with the optimism displayed by both the people. I won't want to talk too much now. We will discuss in more detail. But investors as well as founders, the kind of optimism they have shown. It's been a little more than a year, and unfortunately, we are in the second wave of COVID. But the founders have figured out that we have to have resilience. We have to pivot our business. We have to figure out how to handle the situation. And investors have also said that, yes, this is an alternate class of investment. We need to understand where are the opportunities for investment. So both of them have figured this out, and the survey says it all. So, when we discuss further, I'll tell you more. But yes, broadly, we are really happy and pleasantly surprised to see the positive sentiments from both these categories.
Oh, great. And for the audience, I'll be highlighting, I'll be sharing the key highlights on the screen for everybody's view. But what's interesting to know is, like last time, the survey has been split into two categories. First section being the founders survey and their responses on specific questions, and then followed by investor questions where investors express their views and answer certain questions. So I will go step by step, and I'll begin with the founders, responses. And the first question which comes to my mind, and I'll bring it up on the screen, is it's interesting to see the level of confidence and bullishness about the business growth. We asked this question: are you feeling confident about your business growth? And we received multiple responses, and obviously the graphs will be self-explanatory, but we'd love to get your thoughts, because we've broken down the survey from a survey view perspective and a 100x view perspective. So your thoughts on that, Ninad?
So this graph tells a lot of story. In fact, I would encourage viewers, please download a survey and read it closely. I'm going to just kind of talk about some highlights. This graph is very, very interesting. It says that majority of the founders are seeing growth. Some of them are seeing growth right now, and if you put the total of them, you'll see that 47% of course are seeing growth right now, and there's a large percentage which is going to see growth in the next 6 months. So put together, a majority of founders are going to see growth. There are only very few who are seeing a growth after that. So founders have now figured that yes, this is here to stay. Markets has changed. Technology adoption has increased a lot. New marketing channels have increased. Direct to consumer models have improved. So a lot of changes have happened for the better, for the good of the entire market ecosystem, and that's how founders are very, very bullish about it.
And we also ended up asking question around when are they planning to raise funds, and it's very critical right now during COVID in terms of how founders are planning their roadmap in terms of fundraising. Uh, and again, the graph is self-explanatory, but I like to kind of get your views in terms of the responses.
So 64%, you heard it right, 64% are planning to raise in the next 3 months. So there's no change in their plans of raising funds. Founders are realizing that they have now, a robust pipeline of business is doing well. And on the other hand, they feel there is a fair bit of investor interest in in good startups, startups which will scale, startups which investors feel are a great investment at early stage. And the combination of both is that the founders are not shying away from sticking to their plan of raising funds. This is heartening news, because last year when we surveyed, there was a bit of hesitancy, in terms of raising funds immediately. Founders said that they will raise after a couple of months, but we are seeing exactly the reverse now. Founders are saying, no, we will raise next 3 months was our plan, we will raise it.
And what's really interesting, Ninad, over here is the the kind of responses we've received in terms of how founders are identifying their key source of funding, or their next key source of funding, so to speak. And again, very interesting observations around how they're looking at angel investors and also micro VCs. In terms of they getting funding at the seed stage by both the categories. But very quickly, would like to get your observations on the same.
So I think this community of angel investors and micro VCs have now come a full circle. What I mean by that is, it's no longer a situation where it's just a nascent or whatever. It is now matured, and there are a lot of angel investors left who are now in the ecosystem, and micro VCs. Put together, it's a very strong community now available for founders to tap on. Given India's size of fund requirement, I would not say it's enough, but yes, it's getting close to enough in terms of the growth in number of micro VCs and angel investors. Founders are realizing that they can tap on this community. So both these communities, founders are very keen to tap. So yes, it's heartening news that founders are looking at tapping both these communities.
And when we asked them specifically on their key source of funding, they specifically, the options were given around venture capital, private equity, and Indian micro VCs, and clearly there was a high number of preferences given to individual micro VCs and angel investors. And this is a very interesting observation, considering that this is a risky asset class, considering that we are in 2021 during COVID, and yet not only from a founder's perspective, investors are looking at investing in this asset class, but founders also believe that yes, angel investors and micro VCs are getting aggressive, and we are confident hence in building this, what the products and solutions they're rolling out. In terms of their valuations, and we got very interesting responses. But before I dive into that, we asked them specifically what were their key areas of focus for the first 6 months in 2021. Would like to get your response on the same.
So, I think it remains the same, which is basically getting more traction, as in getting more revenue, pipeline. Those now are very, very critical. One can have a good concept, a good MVP, but after that, the rubber meets the road, which is basically founders have to show that they are able to get revenue, because that's the ultimate day of judgment. When you get good, robust revenue, your product is accepted by the market. So that will remain and is remaining the key focus. Hiring also is now becoming a focus of a lot of startups, because as they grow, they need people with different skills. As they grow, they want people with specific skills, which are, as a founder, you might be passionate, which you should be. You might have the energy in the beginning, but as you start growing, you require some specific domain skills, which the founder may not have, and founder has to rely on the market. So these are the two broad things which are important: new markets or revenue growth, and good hiring.
And at this point in time, before I move forward, we've received two questions, and one of the questions is more close to the graph which we are on, and I think you've partially answered it, but I'll bring it up.
Sure.
And the question being asked over here is, since the first 6 months of 2021 is also seeing a rise in COVID cases, particularly over the last few weeks, and the uncertainty relating to it is ever increasing. What should founders be focusing on for the remaining year?
So yes, if you leave aside the personal side, which is you have to focus on your health, on the business side, we are now 1 year into this kind of problem, health issue, which have faced, public health issue, and a lot of things have permanently changed. It's not temporary change. The way of selling, which is through online, consumer behavior, consumption at home, technology adoption on a wide scale, whether it's for education, which was slow, but now enormous changes. All industries, manufacturing, all industries are adopting technology at a rapid pace because they had no choice. So a lot of these permanent shifts which are happening, you have to ride on them. So in the next 6 months, figure out your opportunity in the business you are. Are you in the SaaS business? Are you in the B2C business? Which business are you? Are you in the health tech business, agri-tech? In each of those business, there are permanent shifts which have happened to the framework of business, and figure out the specific opportunity. There is massive opportunity if you have the pulse of the changes which have happened. So you should understand the changes and figure out what is the opportunity for you over there.
And obviously we touched upon the holy grail, which is valuations, and we asked the founders, what are they expecting, and majority of the founders lean towards an increase in valuation, while a large percentage, or 19% of the folks who applied or responded, believe that there is going to be no change in the current valuation, and a smaller fraction actually of the founders believe that they might see a decrease in their valuation. So what is 100X view on the same?
See, valuation is a game which is settled when the founder goes to pitch and investors show interest. It is not something which is can be defined on a PowerPoint or in a session. But yes, I think founders are more optimistic on increase in valuation because they are sensing two things happening in tandem. One is the market opportunity is growing if you go in the right manner, and number two is investor interest is also growing because we're seeing a whole lot of people realizing that they do have liquidity, and if you have liquidity, one of the things you should do is invest in alternate asset class, which is startups. So combination of this is resulting in founders feeling that yes, they can increase the valuation. So Shashank, there's a question from Shailendra. Can we get a copy of this report? Shailendra, yes, you can go to our website 100X.VC. You can just download it. Absolutely no problem.
So we've got the web link for our audiences taking at the bottom of the screen with the link www.100x.vc/research. So feel free to go there, download the full report, or download the founders report, which is the second part of the report, and specifically the investor responses. So we have three versions on our website: the full version, the founder version, and the investor version. Moving on to the next question, Ninad, when we started 100x.vc along with Sanjay, Yagnesh, and Vatsal in 2019, it's been less than 2 years, and we've funded companies through 4 classes: Class 01, Class 02, Class 03, and now Class 04, which we'll be announcing on May 14th and 15th. And all our investments have happened through iSAFE, right? And we introduced the concept very early on in July of 2019, and we asked the founders what they felt about the iSAFE agreement. Is iSAFE, which is India's simple agreement for future equity, a founder-friendly investing instrument for early stage funding rounds? And did they think 100x.vc had impacted the funding process in India by simplifying it? And I'd like to get 100x your view on how has that evolved, and what do you make of the responses?
So if there's one statistic which really warms my heart, it is this: iSafe. I'm so delighted because 100x introduced, pioneered the concept of iSafe in India. We open sourced it. It's available on our website. It's a simple document, 4-page agreement, which can cut down months of negotiation and discussion. It's absolutely founder friendly, and it's not what we say; it's what people say. It's I'm going to jump even to investors. Startup founders, 67% in this survey has said iSafe is a very, very founder friendly instrument. And let me quickly jump to the second part because it's in connection with this, Shashank, if you may permit me. 72% of investors are saying that iSafe is a valuable instrument. So founders find it founder friendly and useful. Investors find it valuable. There couldn't be a better solution for the Indian marketplace. iSafe has been pioneered by us, but now it has been adopted very widely across the ecosystem. It will become a go-to instrument, a go-to note for all deals in times to come at the early stage.
And before we move on to the investor side, we've received a question, and which also happens to be one of our last questions in the survey, where we touched upon the same topic. The question asked by one of the audience members is: do you think blockchain technology will be a big trend with Indian startups? And we did happen to kind of cover this question where we asked, do you think 100x.v? Sorry, I'm just going to that page. Do you think blockchain technology will be a big trend in Indian startups? And we've received 53% responses by founders seeing blockchain as a clear trend with Indian startups, while 30% of them did not respond towards the same, and a very small fraction felt that the blockchain will not be a big trend. What are your views on this, Ninad?
Well, I wish more founders felt it is a great technology, not just the percentage you mentioned. I would imagine that this is a future. at 100x, we are really excited. We are looking for startups who are embracing this technology properly, fully. I think it's going to be so India is a very complex country with so many diverse issues in all sectors, whether it's the fintech sector, edtech, health tech. Blockchain is not, it's not by itself, it's not panacea to all the problems, but yes, it is one of the key factors in which all these complex issues can come on a common platform for a resolution on a common platform. So I think from India's perspective, blockchain is a very exciting technology. And yes, Shashank, at 100x, we are looking at startups who are embracing this technology.
Great. So I'll move on to the investor responses, and for the audience, we had 15 questions rolled out to the founders and 15 questions to the investors. We are only going through a select few, considering the time which we have on our hands. We've already taken 20 minutes on the founder side. I'll try and give you a quick sense of how the investors responded and get Ninad's thoughts on the same. Very, very interesting insights derived from the investors side. We had 77 investors respond, and we saw interesting perspectives from these investors in times of COVID. And one of the questions which was, how are they guiding their current portfolio companies in terms of expansion? And interesting responses. 68% felt that the companies need to be aggressive, and some of them advised the companies to be maintaining a status quo, and while the small percentage of 2% advised them to consider downsizing in order to conserve cash. Ninad, very quickly, your thoughts on the same.
So 68% want to go aggressive on hiring and expansion. That's an indication of the fact that the capital which they are putting with these startups, they are willing to take a risk. They understand the risk appetite attached to it. It's early stage capital, it's VC capital, and they're willing to take a bet that this will scale rapidly. Shashank, on a different topic but connected to investors, a significant development is the Zomato IPO filing. It's a huge development. It is really a pathway shown to a lot of investors who never thought that SEBI will kind of liberalize the rules whereby a company like Zomato can go for listing and investors can get an exit. That was never the pipeline. So it's opened a massive highway of opportunities for other startups to do an IPO, and more interestingly, for investors to get an exit. When we see that, there will be a domino effect, because more and more investors will feel, yes, we can take this risk, and there is an exit available, not just in other forms, but also an IPO. So it's a huge, huge development which has happened recently, and it's going to really give a lot of momentum.
Agreed. And also, Ninad, ever since last year when the COVID pandemic came into existence in March 2020, obviously there was a lull period, even from an investor's perspective. Either angels or institutional funds, and everybody took a back seat, right? And it was very important for us, being part of the ecosystem, an active investor, and also get a sense from the investors, institutional angels, in terms of how the venture capital industry is now shaping up in 2021. And we got some interesting responses. 11% felt that the recovery, the rapid recovery, will be there in the beginning, but we will struggle. There will be a sluggish recovery. 44% felt a V-shaped recovery, where it fell fast, but it bounced back really well and fairly quickly when we saw a surge in the number of investments and the ticket sizes in the last quarter of 2020. Your thoughts on the same?
So I think 44% is V-shape and 42% is U-shape. Of course, there's a difference between the two, but both show optimism. So if you put together, both show that it's going to recover very fast. I think it's going to be a very, very fast recovery. 44% have said a sharp V-shaped recovery. My money I will put on that. Those 44% investors who have betted on a sharp recovery.
And I forgot to mention this earlier, but we have covered this question where we did ask the investors, in terms of how they see the IPO shaping up, and will they see IPOs of Indian startups on Indian exchanges in 2021, 22, 23, or 25? And we got some interesting responses. Very quickly, 100x view and your thoughts on the same.
Yeah, so I think this Zomato thing has changed everything. It's now the proof is in the pudding. Proof of the pudding is in the eating. So that it is possible. Till now, IPO of a company like Zomato loss making and valuation and all the things which are in the realm of a different kind of a format was only an art of possible. Now it is showing that it is possible to do it. So broadly, yes, I think there will be a flurry of activities of people waiting to see how this goes, and we'll see a flood of IPOs. Absolutely, no doubt in my mind.
So, Ninad, we're short on time, but I have 5 very important questions which I feel we'll go through very, very quickly, which is actually giving us very, very interesting insights on the investors' mindsets, be it angel investors, be it seed funds, or be it growth stage private equity funds or venture capital funds, in terms of how they're looking at investing in 2021. And one of the questions which we asked was how in the next 12 months, how many startups are they looking to invest in? Let me just bring up that graph over here. Yes. So, a clear majority of the investors, have a balanced approach to invest in startups, at periodic intervals. And a good fraction of the investors are looking to invest in more than 25 startups in the next 12 months. These are mostly professional, full-time angel investors. This is a very, very interesting observation we were able to kind of pull out from the survey. Your thoughts on the same?
So I think this graph says it all. There more than 25 is a significant number, but yes, it's a substantial 21% who are willing to do that. I think the average is of less than 5. So that's the general number which people would invest. But yes, my belief is we have done this survey in GFM, January, February, March of 2021. By October, the percentage of 21% will go close and close to around 40%, because people will see the opportunities they are missing out by not investing more than 5. People will see exit opportunities happening. People will see a lot more IPOs happening. As they see this happening, this number of people saying, no, I will do only 5, not more than 5, there will be a fear of missing out, and they will start increasing their portfolio. So this will only increase. This gray part will keep increasing, is my guess.
And how can any report be complete without getting a sense of the top 3 sectors from an investor's mindset? And we did ask that question, and we got some interesting responses there as well. Personally, I felt some of the sectors which I thought the investors would be looking at, growth stage investors and angel investors, were quite different. And we clearly saw a very high focus and interest in deep tech and SaaS startups. We also saw significant interest in health tech and wellness, but also we got some responses towards travel tech and hospitality. And obviously there were sectors which we saw investors not being gung-ho about. Ninad, your views on the sectors which remain and are the top 3, and the ones which are not of interest, and any insights on those?
So deep tech and SaaS, is an obvious choice for a lot of investors. So I'm not surprised. Health tech is there. I think agri-tech is an area which probably they've combined in deep tech, or they've not. Investors have kind of lost sight of. I'm very gung-ho, and at 100x we are very, very Gango Agritech. But broadly, I'm in agreement with these top three areas, which will continue. I think because of the kind of importance we have given to health in the last 12 months, and rightly so, we should have given that much importance earlier. That will remain for some time to come, and hopefully for a longer time after that as a priority. That's why you're seeing health tech and wellness doing exceedingly well. So wellness as a area will also do well. So yes, deep tech, SaaS, health tech, wellness, fintech, and I would also add that agri-tech is ripe for a lot of investment. A lot of new ideas should come there. It's a big market, so that should also see a lot more founders and investors.
And I think one key insight generated was that ed tech and consumer brands, along with biotech, medical devices sectors, were at the bottom of the priority for some of the investors. But each quarter is a defining quarter, and I think 2021 will be showing some interesting results. We again asked the founders, the investors, in terms of their views on the iSAFE, because Ninad, as you've seen, over the last investments through class 01 to class 04, we've seen a large percentage, which is, if I can give a percentage, I think it's upwards of 50% of super HNIs and angel investors come in and join and participate in 100x portfolio companies through the iSAFE, and hence it was only fair to ask them and get a sense of how they felt about the iSAFE agreement and the iSAFE instrument as a valuable investing instrument for quick deal closure. Your thoughts on the same?
So iSafe is a game changer. iSafe, I would put it reverse to investors. If you're investing in a company other than iSafe, we should figure out why you're doing it. It's if we feel the market is now mature, we have invested with iSafe Note. We have pioneered it. It is the standard instrument. It should become the standard. You should figure out why you're doing other than that, because it is quick, it is fast, it is efficient, and gets you on the cap table very, very quickly. That's what you want, and that's what you will get with iSafe.
And while investors continue to invest, they are gung-ho, that's been established. There are selection criterias which investors are still focusing on, and we did end up asking them and specifically allocating a certain percentage on founders, product IP, market size, business model, and exit opportunities. And based on the percentages, obviously we saw responses where high percentage was given to founders, followed by product and IP, followed by market size, business model, and then exit opportunities. But Ninad, your thoughts and 100x view on the same?
Well, founders are the key to success of any startup. They really make a big difference. And if I may, Shashank, I read Sanjeev Bikhchandani's quote in the morning, saying that money is commodity, entrepreneurship is rare. So for us also, a very, very humble quote after the Zomato filing. It's so loaded, the comment. So founders make all the difference. You might have the best technology in the world, the biggest idea in the world, the best team in the world, the best of everything. If the founder is not able to execute, it's all gone. It's lost. So this red line of yours, and rightly so, Shashank, it's shown as a red because that's the most important part. Founders' ability is critical, and investors have flagged it as the most important ability in the evaluation process.
Agreed. And while 100X.VC doesn't fundamentally believe in valuing a company when we are investing, and that's the whole purpose of iSafe, we did end up asking both founders and investors on their expectations on the valuations for their pre-Series A and Series A rounds. And this was largely to understand the confidence level or the lack of confidence level, in the ecosystem by founders in terms of how they're looking at their growth or their companies. And we got some interesting responses, Ninad, for this question when we asked any changes in valuations that founders are seeking from investors. Your observations on the same?
So I think this valuation is a game which will keep, it's a dynamic situation. There's no one point at which you say, okay, these are the valuations. It's got a lot of moving parts, and what is happening now is uh, because of a lot of interest by angels in startups, this game is changing. So founders also expecting that they will get higher valuations if they have shown good traction, if they have pivoted to the new business reality. They feel, and I don't think they're wrong, that they should be able to get good valuation because there are a lot more angels which are getting into the ecosystem. There are a lot more micro VCs getting and supporting this risk capital. Risk appetite is increasing, rightly so, and opportunity is also growing. So combination of the two is, intersection of the two is valuation, and that intersection might keep going up, but it is still not at a level which is insane or stratospheric. There are a lot of good opportunities available in India.
Yeah. No, and I think what we've seen over the last 1.5 years is that certain business, certain sectors have fundamentally grown, uh, uh, due to the whole digital drive in India, and hence as a function of that, founders have felt fairly confident in demanding higher valuations, or by Indian standards, relevant valuations from investors. Investors seem to be comfortable and still actively investing. That brings us to our last question, which was asked to the investors. On a scale of 1 to 10, how important are these factors for founders in 2021? Raising next round of financing, increase in customer acquisition, increase hiring, expansion in newer markets, or cash management? Ninad, your thoughts on the same?
So I had mentioned earlier as well, it's important to drive good revenues. So here again, investors survey shows that customer acquisition is on the top of the mind. The most important thing investors feel that founders should chase customer acquisition, and that's the reality. If you have more customers, it proves that a product is accepted by the in the market. You might have the best technology, you might be in love with your product, you might love your technology, but if customers are not buying, there's no point. So I think investors have rightly put the most importance to customer acquisition.
Great, thanks, Nirad. We've gone through the entire report. Your final thoughts, broader thoughts on the conclusion, and our view on the entire founder investor sentiment outlook survey, and thoughts around the remaining part of 2021.
Sure. So I would urge viewers download the report. It's free. It's available on our website. We would love your comments, suggestions, criticism, feedback. Everything is valuable for us because we want to make this, and it has become already in this year an industry standard. But we want to keep improving it. It's an annual sentiment survey, and we want to keep improving it. If we don't hear from you, we'll not be able to improve it. And more importantly, I think obviously one has to take care of your health at this point of time. That's the most important thing. But after that, a lot of frameworks of business have changed. There's rapid technology adoption, the way people are consuming products at home. A lot of things have changed. If you are able to identify great opportunities, there is a lot of investment opportunities with good risk and reward. Huge amount of reward possible, of course, with associated risk. But there are massive opportunities in 2021 in India. We are going to see a lot more unicorns soon. The first 4 months, we saw a huge number of unicorns. We are going to see a lot more unicorns in 2021. And that's a function not of valuation, that's a function of the opportunities, underlying opportunities the Indian marketplace gives you. Tap it, grab it, fund it. This is 2021. There's a massive opportunity for founders and investors.
Thanks, Ninad, for sharing your thoughts and insights. And with that, we come to the end of our discussion with Ninad Karpe, partner at 100X.VC, on 100X.VC's second edition of India Sentiment Outlook Survey. As mentioned during the discussion, feel free to visit our website to download your own copy. at www.100x.vc/research. It's at the bottom of the screen. And we have 3 versions of the report. One is the full, which gives you the founder and investor responses. And if you're only interested in founder or investor, we've got those 2 versions as well for your perusal. So with that, we come to an end to this discussion. Wishing everybody a very happy weekend. Take care of yourselves and keep doing the great work all of us and all of you are doing. Thank you, Ninad, once again.
Thank you. Thank you.